87. Look at the size of that volatility bracket for that volatility play. The calls never even get close. The puts never even get close. Never mind the straddle. So even if all you'd done was buy an outright call or an outright put, you never even get close to making a break even. Never mind the profit on those trades, guys. So you can see a lot of people say, surely to goodness, and I've seen it before in the retail space, people talking about this, and they say, oh, look at how easy it is to make money trading these volatility breakouts. There's not a chance you would have made any money on those. You'd have lost a fortune buying a call or a put option from yesterday's closing bell at 395. Nowhere near the high, nowhere near the low price to make any money on those options. There is no free lunch. No free lunch, guys. So obviously the idea is when you saw the volatility as extensive as this, well, you could obviously have sold that straddle, couldn't you? You could have sold the straddle for that huge premium. Now, how would you be able to play that? Well, there's a bit of a danger there, but you do have access to the futures markets. So you could obviously use that to hedge out any upside or downside exposure following the actual CPI numbers. So obviously following the CPI numbers, you could say, well, I could be losing a lot of money here, but you don't necessarily have to, because you could have bought some futures to hedge out, but you would only have needed to buy futures if you'd went above here. You'd only need to have sold futures if you'd went below here on the CPI print itself. So you can obviously start to recognize these dealers have made a fortune today by being in that volatility play there, by being short volatility. And that's why they priced up the volatility significantly. We said that yesterday. They really have put a big bang into that volatility pricing. And rightly so. I mean, I would be putting a big bang into the volatility pricing. I wouldn't want to keep it too tight coming into a CPI number. But you can see they did a great job of pricing this one ridiculously badly. You know, anybody that paid that must be absolute idiots. But there we go. The dealers spot on their maximum gain, of course, right here. There's their maximum gain price right there. And the price is right at the maximum gain, Ab. Look at that. That's their maximum gain right there. Maximum pain for the buyers, maximum gain for the sellers. Beautiful, isn't it? Beautiful. Crazy good trade, and obviously with the time decay on that option today, they're making more and more and more and more money, getting obviously closer to that expiry, and that's the deal. That's the deal right there. Perfect example of the market makers in all their glory doing exactly what they do best, ripping the piss.